Most people think animal farming is simple. You buy animals, you feed them, you wait, you sell, and somehow, money appears. That idea is wrong. Today, animal farming is closer to running a factory than living a rural lifestyle. It involves planning, cost control, biology, contracts, disease management, logistics, and timing. Some producers make very good money. Others work for years and barely move forward. And the difference is not effort. It is choice. Specifically, which animal you decide to raise. Because not all animals are businesses. Some are just expensive habits. In this video, we are going to talk only about reality. Which animals actually generate profit today? Which ones look profitable but usually disappoint? And which systems work consistently, even in unstable markets? No motivation, no nostalgia, no fantasy, just numbers, structure, and decisions. Why animal farming is not what it used to be. 30 or 40 years ago, most farms worked in a similar way. Low technology, basic genetics, simple feeding, limited veterinary control, slow production. Profit depended mainly on land size and time. That world no longer exists. Modern animal production is built on genetic selection, precise nutrition, controlled environments, automation, health monitoring, and contracts with large companies. Two farms can raise the same animal and have completely different results. One makes money, the other loses money. The difference is not luck. It is the production system. How this ranking was defined. This list is based on practical business criteria. How much profit is generated per cycle? How fast the money returns? How easy it is to scale? Market stability, disease risk, required investment, demand consistency, not tradition, not personal preference, not what feels safe, only what works. The most common mistake, starting with cattle. When beginners enter animal farming, most start with cattle. It feels safe, it feels traditional, it feels reliable, and in some ways, it is. But safety does not mean profitability. Traditional beef cattle systems usually involve long production cycles, high land requirements, slow cash flow, strong dependence on weather, and low efficiency per hectare. The money takes time to come back. Very long time. Many beginners repeat the same story. They buy animals when prices are high. They sell when prices are low. They underestimate feeding costs. They lose weight during transport. They ignore disease losses. They forget about inflation. After 2 years, they realize something uncomfortable. They worked a lot. They invested a lot, and the return was small. Cattle is not bad, but cattle is not where modern profitability starts. It is where patience is tested. What profitable systems actually have in common? Real profitable animal systems share 3 characteristics: fast production cycles, high level of control, easy replication. Speed matters because money that comes back quickly can be reinvested. Control matters because predictable systems reduce risk. Scale matters because volume multiplies small margins. This is why industrial animal production dominates. And this is where the first truly profitable animals appear. Number 5. Broiler chickens. Meat production. Broiler chickens are not cute. They are efficient. A modern broiler reaches slaughter weight in about 40 days. That means 6 or 7 complete production cycles per year. Each cycle brings revenue. Each cycle allows improvements. Each cycle strengthens cash flow. Large producers operate with automatic temperature control, precise feeding systems, standardized genetics, strict sanitary protocols, contracts with slaughterhouses. The profit per bird is small, but when you raise tens of thousands of birds at once, the numbers change. One poultry house can outperform many small cattle farms. Advantages: fast return on investment, high global demand, predictable performance, easy to scale, well-developed market structure. Disadvantages: high disease risk, strict biosecurity requirements, dependence on integrator companies, low margins without volume. Broiler farming is not beautiful. It is repetitive. It is technical. It is industrial. And that is exactly why it works. Number 4. Egg production. Laying hens. If broilers are fast, laying hens are stable. Egg production creates daily income. Not monthly, not yearly, daily. Modern egg farms use automated collection systems, controlled environments, optimized diets, high-performance genetic lines. A single hen can produce more than 300 eggs per year. This creates predictable cash flow, which is extremely valuable in agriculture. Advantages: constant income, strong market demand, lower mortality than broilers, scalable production, stable business model. Challenges: feed price sensitivity, welfare regulations, price volatility, infrastructure cost. Egg farming is boring. And boring businesses are often the most profitable. A reality most people dislike. The most profitable animal systems are not exciting. They are repetitive, controlled, predictable, emotion is irrelevant, efficiency is everything. This is where many people give up. Because they want farming to feel meaningful. But profitable farming feels technical. Like running a machine. What comes next? So far, we covered animals that generate consistent income. In the next part, we move into systems with higher margins, higher investment, higher risk, and much higher returns. This is where farms start operating like real companies. This is where mistakes become expensive. And this is where modern animal farming separates professionals from amateurs. In the first part, we talked about systems that generate stable income. Broiler chickens, egg production, strong cash flow, predictable demand, industrial logic. Now we move to animals that operate on a different level. These systems require more planning, more money, more technical knowledge, but they also offer higher margins. This is where animal farming stops being a rural activity and becomes a structured business. Number 3. Pigs, industrial pork production. Pig farming is one of the most misunderstood animal businesses. Many people imagine dirty facilities, bad smell, and constant problems. Modern pig production looks nothing like that. It is one of the most optimized animal systems in the world. A pig reaches slaughter weight in about 160 to 180 days. That means 2 full production cycles per year. Not as fast as chickens, but much faster than cattle. And with much better feed conversion. Pigs transform feed into meat extremely efficiently. This is why pork is the most consumed meat on the planet. How industrial pig farming works. Large-scale pig production is divided into stages: breeding, gestation, farrowing, nursery, finishing. Each stage is optimized, temperature is controlled, feed is calculated by age and weight, health is monitored constantly, growth is measured weekly, nothing is left to chance. Contracts with slaughterhouses guarantee sales. Production planning defines how many animals enter the system every month. This creates predictable revenue. Why pigs are profitable? The main reasons are simple. Excellent feed conversion, high meat yield, short production cycle. Strong global demand, well-developed industry. A well-managed pig operation can generate high margins per square meter, especially when integrated with feed suppliers and meat processors. Advantages: high productivity, strong market demand, good scalability, fast learning curve with technical support, high level of automation available. Disadvantages: high initial investment, strong sanitary requirements, sensitive to disease outbreaks, environmental regulations, requires skilled management. Pig farming is not for amateurs. Small mistakes spread fast, but professional systems are extremely profitable. Number 2. Dairy cattle, modern milk production. Most people think milk production is low profit. That is true for traditional systems. It is not true for modern ones. Industrial dairy farming is one of the most complex and profitable animal systems when well managed. The difference is technology. What changed in dairy farming? Modern dairy farms use genetic selection for milk yield, robotic milking systems, automated feeding, real-time health sensors, reproduction management software, climate-controlled barns. A single high-performance cow can produce more than 10,000 liters of milk per year. Some produce far more, and milk is sold every day. That means constant income. Why dairy can be extremely profitable? Because it combines continuous production, high value per animal, byproducts, calves, manure, genetics, contracts with dairies, and long-term stability. Large dairy farms operate like factories. Milk leaves the farm daily. Cash flow is stable. Planning is possible. Advantages: daily income, high production per animal, strong domestic demand, multiple revenue streams, long-term stability. Disadvantages: very high investment, complex management, labor-intensive, disease control, critical, thin margins without scale. Dairy farming rewards precision. Bad management destroys profit quickly. Good management builds very strong businesses. Why these systems outperform traditional cattle? Compared to beef cattle, pigs grow faster, chicken cycle faster, dairy generates daily income. Beef cattle remains important, but it is slow. Modern agriculture values speed and predictability. The invisible barrier. At this level, most beginners stop. Not because the systems do not work, but because capital is required, technical knowledge is required, management discipline is required. This is where animal farming becomes professional, not romantic. Professional. The last category. So far, we covered broilers, egg production, pigs, dairy. These systems dominate global protein production, but they are not the most profitable. The most profitable animal systems are smaller, more specialized, less obvious, and often ignored. That is what we will cover next. Animals that generate very high margins. Animals that do not appear in beginner conversations. Animals that turn small farms into high-income operations. So far, we talked about large-scale systems. Chickens, eggs, pigs, dairy. These dominate global food production. They move massive volumes. They rely on industrial logic. But volume is not the only way to make money. There is another category: smaller operations, higher margins, more specialization. This is where many of the most profitable animal businesses exist. Not obvious, not traditional, but extremely effective. Number 1. Fish farming. Aquaculture. Fish farming is currently one of the fastest growing animal production sectors in the world. Wild fishing is limited, demand continues to increase, so production moves to controlled systems. Modern aquaculture uses ponds, raceways, recirculating systems, ROS, automatic feeding, oxygen control, water quality sensors. Fish grow fast. Some species reach market size in a few months. Tilapia, catfish, trout, salmon. Each system has different investment levels. But the logic is the same: control the environment, maximize feed efficiency, minimize mortality, sell into a strong market. Why fish farming is extremely profitable. Feed conversion in fish is excellent. Better than cattle, better than pigs, close to chickens. Production density is high. You can produce tons of protein in a small area. Water systems allow year-round production. Markets pay well. Restaurants, supermarkets, export companies. When properly managed, aquaculture delivers very high margins. Advantages: fast growth rates, excellent feed efficiency, high demand, flexible production systems, strong scalability, high value per kilogram. Disadvantages: water quality management is critical, disease spreads fast in closed systems, high technical knowledge required, initial investment, energy costs for advanced systems. Fish farming is not simple, but it is powerful. The forgotten gold mine: specialty animals. Beyond mainstream production, there are niche animals. They do not serve mass markets. They serve specific ones, and that is why margins explode. Rabbits. Rabbits are cheap to feed, grow fast, reproduce quickly, require little space. In many regions, rabbit meat is considered premium. Low competition, high price per kilogram, low investment, perfect for small operations with good market access. Quail. Quail eggs sell for several times the price of chicken eggs. Quail mature fast. They require little space, high egg production relative to body size. They are used for gourmet markets, restaurants, and health food. Low volume, high value. Goats and sheep, goat milk, goat cheese, lamb meat. These products sell at premium prices, especially in urban and export markets. Goats tolerate harsh environments. Sheep grow faster than cattle. Lower land requirements. Good diversification option. Bees. Bees are not livestock in the traditional sense, but beekeeping can generate extremely high returns. Honey, wax, propolis, pollination services, low feed cost, strong market demand, high profit margins, seasonal, but powerful. Why niche systems outperform volume systems? Mass production. Low margin, high volume, high investment, strong competition. Niche production. High margin, low volume, less competition, more price control. A small fish farm or specialty animal operation can generate more profit per hectare than large cattle farms. The limitation is market access. You must know who will buy, and at what price. The real ranking. If we rank purely by profitability potential: aquaculture, fish farming, niche animals, quail, rabbits, goats, bees, dairy farming, pig production, poultry production, traditional beef cattle. But this ranking changes based on location, market access, feed cost, regulations, capital availability, management skill. Profit is contextual. The uncomfortable truth: the most profitable animal is not universal. It depends on who you can sell to, what you can control, how well you manage risk, how disciplined you are. Many people choose animals based on emotion. Professionals choose based on numbers. What comes next? In the next part, we will talk about real numbers, investment levels, typical mistakes, and how beginners destroy profitable systems. We will compare costs. We will compare risks. We will explain why many people fail even with good animals. By now, one thing should be clear: profit is not about the animal. It is about the system. The same animal can generate strong profit in one farm and destroy another. So in this part, we will talk about what actually determines financial results. Real costs, real investments, real risks, and real mistakes. Because this is where most people fail, not because they chose the wrong animal, but because they underestimated the business. Investment levels, reality check. Let's simplify. Low investment systems: quail, rabbits, bees, small goat, sheep operations. You can start with a few $1,000s. Infrastructure is simple, risk is moderate, returns can be very good if you have buyers. Medium investment systems: broiler, chickens, egg production, pigs, basic fish farming. You need buildings, equipment, biosecurity, feed contracts. Investment grows quickly. Returns are stable if managed well. High investment systems: industrial, dairy, recirculating, aquaculture systems, ROS, integrated pig operations. Now we are talking about hundreds of thousands or millions. High profit potential, high technical complexity, high risk. This is where farming becomes corporate. Operating costs nobody likes to calculate. Most beginners calculate only animal price, feed price. That is not enough. Real costs include electricity, water, labor, veterinary services, medication, mortality, losses, maintenance, transport, insurance, financing, interest, taxes, equipment, depreciation. Ignoring these numbers creates fake profit. On paper, everything looks great. In the bank account, nothing changes. The 4 mistakes that destroy profitable farms. These mistakes repeat everywhere. Different countries, different animals, same result. 1. Starting too big. People see success stories and jump directly to large scale. They borrow money, build big structures, buy too many animals, then reality arrives. Small errors become expensive, cash flow collapses, debt remains. Professional farms grow slowly, they test, they optimize, they scale after stability. 2. Ignoring disease risk. Disease is the fastest way to lose everything. Chickens, pigs, fish, cattle, it does not matter. One outbreak can erase years of profit. Biosecurity is not optional, it is not paranoia, it is survival. 3. No guaranteed buyer. Raising animals without knowing who will buy them is gambling. Markets change, prices drop, transport fails, processing plants close. Professional producers secure buyers first, then produce, not the opposite. 4. Emotional decisions. My family always raised this. I like this animal. This feels safer. Business does not care about feelings. Numbers decide. Comparing profit in practical terms. Let's talk roughly. These are simplified examples, not exact values. A broiler system may generate small profit per bird, but many cycles per year. A dairy cow may generate steady income daily, but requires heavy investment. A fish farm may generate high profit per square meter, but requires technical control. Quail or bees may generate high margins, but depend on niche markets. Beef cattle may generate slow, low margins, but with lower management intensity. There is no magic animal, only suitable systems. Why most beginners choose the worst option? Because it is familiar, it looks simple, everyone does it. Risk feels lower, so they choose traditional cattle. Slow returns, low margins, high opportunity cost. Then they say, farming doesn't work. It does. They just chose the weakest business model. The real skill. The most profitable farmers are not animal experts. They are system builders. They think in cash flow, risk, contracts, data, efficiency, repeatability. Animals are just biological machines inside a financial structure. What the last part will cover. In the final part, we will answer which animal is best for beginners, which is best for small land, which is best for fast money, which is best for long-term stability, and how to choose based on your capital, your location, your market, your risk tolerance. No theory, only practical decision logic. After all this, the question becomes simple. Which animal should you raise? There is no universal answer. There is only a correct decision for your situation. So let's build this logically. Step 1. How much money can you really invest? Not how much you wish you had. How much you can invest without breaking your life if it fails. If capital is low, quail, rabbits, bees, small goat or sheep systems. Low entry cost, high learning value, flexible scaling. If capital is medium, broiler, chickens, egg production, pigs, simple fish farming. Structured systems, stable markets, requires management discipline. If capital is high, dairy farming, advanced aquaculture systems, integrated pig operations. High returns, high complexity, high risk. Step 2. Who will buy your production? This matters more than the animal. If you do not have buyers, profit does not exist. Ask, is there a slaughterhouse nearby? Are there egg distributors, restaurants, export companies, local markets? Dairies? Distance kills profit. Contracts protect profit. Step 3. How much risk can you tolerate? Some systems collapse fast if something goes wrong. Chickens and pigs are sensitive. Fish are sensitive. Dairy is sensitive. Bees and goats are more tolerant. Your personality matters. If stress destroys your decisions, avoid fragile systems. Step 4. How technical are you willing to become? Modern profitable farming is technical. Sensors, formulas, protocols, data, schedules. If you hate structure, avoid industrial systems. Choose niche systems. Simple recommendations. For beginners: egg production, quail, goats, small-scale fish farming. For fast cash flow: broiler chickens. Egg production, fish farming. For long-term stability: dairy farming. Egg production, integrated pig systems. For small land: quail, rabbits, fish, bees. Final truth: animals do not create profit. Systems do. Discipline does. Market access does. The same animal can be a disaster in one farm and a goldmine in another. The difference is not luck. It is planning. Closing: if you want to make money with animals, think like a business owner, not like a farmer from the past. Choose based on numbers, markets, risk, and control. Not tradition, not emotion, not habit,